Good morning, everyone, and welcome to 1.5 million new homes, the local government challenge, sponsored by Loft and by Lovell. My name is Toby Fox, and I'm visiting a different council every month to ask what works and what needs to change to get more homes built. And for the last month, I've been in the London borough of Enfield, posting a number of videos on YouTube and LinkedIn and TikTok and Instagram throughout November. And as luck would have it, the Enfield season coincided with yesterday's budget, which should give us a clearer line of sight on what the government expects from places like Enfield towards hitting that 1.5 million homes target. So a few short highlights from me. We got 48 million quid to boost planning capacity. We got 1.3 billion devolved to mayors, potentially including the GLA. New funding for brownfield land remediation and the landfill tax reform being dropped, which might have made more sites unviable. And the long-term social rent settlement was confirmed, giving councils more certainty in planning new affordable homes. Is that it, though? Is that enough to get housing moving again? Does this budget actually make delivery easier in Enfield, and where do the real barriers sit? To find out all that and more, let's meet our guests. So welcome in alphabetical order, our magnificent panel this morning. Lorraine Casey, Regional Partnerships Director with Lovell Partnerships, and Anna Clarke, Director of Policy and Public Affairs at the Housing Forum. Morning, Lorraine. Morning, Anna.
Morning.
Joanne Drew, Executive Director of Housing and Regeneration at the London Borough of Enfield. Good morning, Joanne. Dan King, Managing Director for London at Vistry Group. Hi, Dan. And Danny Sutcliffe, Founding Partner of Loft. Good morning, Danny. So, what a panel. Great stuff. Let's get into it. Joanne, what most disappointed you about the budget, but what also gives you most cause for optimism about the new context?
Okay. Well, I think it's just a couple of points of context, really. So I'm always struck by how housing is seen as an asset and a source of taxable income in its different sort of routes to becoming a home. And whereas the challenge that we've got is about providing enough homes for people to live in. So the conflict between those two pressures continues to prevail in government policy. So that's something that we all understand and have to manage. In Enfield, we're really committed to this agenda, and we're really strongly placed to respond really to whatever is thrown at us. So last week we had the announcement about fair funding for local authorities, and Enfield is one of the beneficiaries in London, I have to say, after 10 years of underfunding, as we would say. So we're in a reasonable position from that perspective, although no borough is well funded, but we are better funded than many and well prepared. From our housing side, we've got a well managed housing revenue account that has the capacity to deliver 3,500 homes over a 10-year rolling basis. And we've also got a good council housing service as reviewed by the regulator. So we're in a really good position to enable and directly deliver new homes and manage those homes well. We're also in a borough full of amazing growth opportunities. As you say, we have Meridian Water, 10,000 homes. We have the potential new town of over 21,000 homes and a large council house building and regeneration programme. So everything is there for us to play for. I think the thing that disappointed me most is more around frustration. I was so keen to hear about rent convergence.
Yeah.
Really keen to hear about whether PWLB discount rates would continue. Very disappointed about the access to the National Bank, which could potentially halve our costs of capital, which would make a massive difference to us. So, I mean, in a local authority world, we're all producing our cabinet reports now for February, and those sort of bits of information are absolutely key to working out what the capacity we have for development going forward is, and what our bid for the next GLA programme is. So there's a little bit of frustration, but also welcome the fact that the important issues are being properly considered by colleagues in government, and that there is a genuine attempt to work with us and to understand the issues that we're facing to come up with good policy. So perhaps patience is a good thing in that respect. So I think those are the main things. I'm very keen to understand from the development sector the impact, because we want to work well with developers who are firing on as many cylinders as possible. We need to understand how we can therefore intervene to plug the gaps and to make the whole picture work.
Thanks, Joanne. Okay, before we do that, which we'll do just in a second, I just want to dig into one of the things that you mentioned, that a decision not to allow councils to access low-cost loans in effect for housing delivery. What impact will that have on your ability to deliver new homes? And what's your message to MHCLG, but ultimately to Treasury, about that decision?
So I think when a council builds a home, there's no profit that is generated for outward purposes. It all goes into boosting the capacity of your housing revenue account. We all work to hurdle rates. We have the lowest hurdle rates in the sector, I would argue, so just above the cost of capital is our minimum rate. So if at the moment you've got, with the 60 basis point discount, you've got a cost of capital at 4.5%, if you take that down to 2%, then you can deliver schemes that otherwise would have been stalled. Because if you don't deliver at your hurdle rates, you're just undermining your future business plan capacity, and it doesn't put you in a good position to be able to manage the homes well. So that sort of region of 2% costs of capital would make a massive impact, and the benefits would plough straight back into the quality of housing service and the amount of council-owned homes that we can control.
Brilliant, Joanne, and presumably also make you a better partner for the private sector, because it would give you more headroom to be able to pull levers as an active partner.
To
Dan,
forward fund, and can I also say as well, you know, councils are interested in build to rent now, and I think we could be a good partner in the future with some work, capacity building, to support partners with underwriting build to rent schemes. So it's not just that sector.
Thanks, Joanne. And the reason for digging into this is that we've got a conversation with government about councils responding to that decision. Dan, what's your view on that first, and then beyond that, the sort of wider implications of the budget decisions on housing delivery?
Yeah, morning, Toby. Morning, everyone. Yeah, well, just first off, we've delivered about 1,200 homes in recent years in Enfield, and have another 2,000 that are currently going through planning and starting on site and making their way through. So we're working very closely with Joanne at the moment, and we're very happy with a very open and proactive borough. Do you want me to address the build to rent point initially?
Yeah, absolutely. Yeah.
Well, so what? Yeah, of those. So I guess we'll come when we talk about the budget. I guess one of the big things that's missing is first time buyer support. And I get that's quite a big discussion, so maybe we'll come to that in a second. But a direct indirect result of the need for that and the housing market in London at the moment is that we are delivering a lot more build to rent and a lot more affordable housing as well, actually. So we see our pipeline for certainly for this year and the next year or two ahead actually has a really low level of open market housing. Probably only around 15% of the homes that we're going to deliver, and that's really just because that is all that we are seeing the market absorb at the moment. So the market is around probably sales rates of less than 0.5 a week, I'd say, for all developers across the board in London. So build to rent, as Joanne touched on, is a key part of filling that gap. Build to rent hasn't been without its challenges as well. So forward funded investors have been maybe few and far between, linked back to interest rates, gilts, alternative investments. From our perspective, being the partner of choice for those kind of forms of investment is really key. But yeah, in Enfield, we do see at least two of our major projects coming forward with significant build to rent. We are into heads of terms with well-backed and well-funded institutional investor to do so. Currently talking to Joanne's teams about that. has many benefits. It brings immediate placemaking, brings a lot of there's a huge demand for rent as well as all housing tenures at the moment. But it also enables us to build quickly, so we're not constrained by that open market sales rate, which would otherwise slow down build programs. So we can build more efficiently, we can build quicker, and ultimately deliver the projects quicker.
Fantastic, thanks, Dan. And then the sort of wider implications of the budget yesterday.
Yeah, I guess my take on it is it's fairly muted in terms of what difference it will make for us going forward. To touch on some positives, I guess we have had some positive news already. So there was a reaffirmment of the social and affordable homes commitment, which again is another bigger topic we can happy to go into in a moment. But obviously that's good news, that's reaffirmed. Rent convergence obviously touched upon. And then some of the planning measures, so the planning infrastructure bill, the emergency measures for which the consultation is about to kick off, and then the recent announcement around reducing number of statutory consultees and presumption in favour of yes around train stations. So I think there's lots of important planning, very helpful planning news coming out. That's not really the number one constraint at the moment, and probably what I said a second ago is the number one challenge. But picking out some good news from the budget, smaller scale good news, but there's the landfill tax. So slightly obscure, but had the potential to increase the cost of delivering a home by about £15,000. Long story short, it was converging rates. So inert materials or exempt sort of qualifying materials like soil and bricks would have basically been charged at a higher rate, would have added to the cost of construction. So I think that's good news that has been dropped, albeit with some small increase in rate. And then secondly, something that a colleague of mine's been pushing for years is on the treatment, the golden brick rule. So there's a commitment in the budget to consult upon that. So essentially, as most people on the call will know, but just to summarise, the partial exemption and treatment of obviously social housing means that VAT isn't recoverable on land purchases, which is at standard rate, whereas housing is delivered at zero rate, and the golden brick is the thing that triggers it becoming housing rather than land. Well, hopefully, I mean, that consultation is a positive sign that hopefully that brings forward the point at which social housing is recognised as housing to much earlier in that process. That just helps with a really positive impact on developer cash flow, finance costs, and will make a positive move towards viability. And there's the one final thing, sorry, Toby, the lifetime ISA reform. So there's not really much detail on that at the moment. Perhaps that will help be geared slightly towards helping first-time buyers. Detail to follow, but perhaps a positive in there as well.
Yeah, some tinkering with demand as well. Thanks, Dan. Lorraine, Danny, you both had your hands up. If you do want to come in, put your hands up again. Otherwise, I'm just going to go straight to Anna. Lorraine, did you want to come in?
No, it's just to compliment what Dan said there. There was so it mentioned about when we talk about landfill tax, additional funding for DEFRA to provide public bodies with grants to remediate land, and I think particularly in the London region that's significant really when we're talking about impact on viability. I don't know if anyone else picked that up, but on top of the ISA, I was disappointed to see that there wasn't any kind of motivation there or any introduction of first time buyer incentives really, just to complement what Dan said there really.
Yeah, okay, thanks Lorraine. Danny?
And my point was just to reiterate what Joanne was saying about the implications of lower cost of borrowing. When you're looking at discounted cash flows over 30, 40, 50 years, the implications of a couple of a percentage drop or 2% drops makes a huge difference. I mean, what local authorities have seen with interest rate rises is a huge capacity being taken out of their HRA and that headroom being massively reduced. So when all of the settlements were made many moons ago, that has been completely eroded, and therefore the capacity of local authorities to deliver more social housing at scale has been massively eroded, and that reduction in those 2% would bring us back to where we were. And I think that would give Enfield the capacity, and also lots and lots of other local authorities, much greater capacity to deliver, which is what we really need. And I think it was a kind of a missed trick there really, because at the moment housing associations have got a load of other issues, particularly within London and the G15. Outside of London it's a different case, and so we need the local authorities to be stepping up. But if you've got no headroom, they're in the same position as the G15, and there was a chance there to do something about that.
Yeah, thanks for that, Danny. Anna, it seems to me, sort of speaking really, really broadly, that the government has sort of feels that it's fixed planning. It's done a lot of planning work. It's fixed funding. It's put 39 billion quid into social housing and affordable housing, and now it's kind of really getting into the weeds, into the granular detail of individual small aspects that need a tweak here and a pull here and a push there. Is that right? I mean, is that actually enough to get housing delivery going?
Oh, that's a good question. I mean, I think you're right. Yes, they would say that they've done the funding and they've done most of the planning reform. And of course, some of the planning reform is not really budgetary, so it's not much of a focus on here. And so there is a lot of little details in here, and that's where they're little tweaks, things they're trying to fix. I mean, in one way, it's not enough, no, because the big problems is viability, and they haven't fixed that, and they can't easily fix that, although, as Dan was saying, some first-time buyer support would be enormously helpful at this point in the market cycle. I mean, we had it when it was least needed, and we took it away when it was most needed. So bringing that back would be really helpful. And there's quite a few little tweaks that I think are worth noting. I mean, there's reforms to electricity bills, which you might think are not really housing, but they're a huge part of decarbonisation and getting people off of gas boilers onto heat pumps without making them poorer. So that's good to see, and a recognition that they need to do more on that to reduce that differential. There's a small amount of money for new planners. I'm not too excited about that. There's changes to housing support for people in temporary accommodation and putting in more of a taper so that they don't lose support suddenly if they start work. So I think that'll help with people in temporary accommodation who might be able to maybe sometimes rent for themselves or become more self-sufficient if they aren't disincentivized. And also there's encouragingly a commitment to review the way that temporary accommodation is paid for, recognition that public sector bodies are basically competing against each other for accommodation sometimes, and the Home Office can be unhelpful in trying to get the same accommodation as councils are getting. So trying to kind of come up with a more cooperative and pragmatic approach to that. So I think those are all good things. There's a couple of things I'd also flag that landlords ought to want to be watching out for, and councils. The extra money that private landlords are paying on the rental income is a risk to the private rented sector, coming on top of the Renters Reform Act coming in quite soon. It isn't coming in for another year, thankfully, but it will be a further push that some landlords, and if landlords exit, you could see more people becoming homeless or looking to the council to help them with that. And there's also, I noticed, a consultation on leaseholders to request broadband. So that's a thing that stock managing landlords will need to watch out for. They may have to be involved in that.
So more pressure on landlords, which isn't necessarily a good thing, although landlord reform is, it is needed. So Anna, are you expecting to see an uplift in housing delivery as a result of or following yesterday's announcements?
Well, I think we won't see the crash that we would have seen if they hadn't announced the change to landfill tax. So that's good. I think we are seeing slight signs of an uplift, a slow one in many areas, maybe more out of London than in London. I think London does have a particularly tough market in that respect.
But there's ongoing consultations, aren't there? So there's a sort of sign that the government is paying attention to the sector and is that's ongoing attention, even though we might be slightly underwhelmed by a day of announcements.
Yeah, there is. The government, I mean, the landfill tax is very much a result of them having listened. The golden brick issue that Dan mentioned also is due to engagement with the sector. So they are listening and trying to do the things that they think they can do to help, with the exception of the first time buyer support, that I think they are concerned about whether that might just boost. The accusation previously was that it boosted developers' profits or land values and didn't bring much return. So that's why they're nervous on that one.
Yeah, thanks, Anna. Okay, audience, it's very early in the morning, but hopefully you're just about through your first cup of coffee and you might be ready to engage. And do put some questions into the chat if you'd like to put anything to our panel. I'm just going to for you, Joanne, one of the the sort of, from a layman's point of view, one of the observations of what's happening is that the private sector is calling for more help on demand side with Help to Buy and support for first-time buyers and so on. Is that entirely helpful from the perspective of provision of social and affordable homes, and from a council's point of view? Is that something that's purely for the benefit of the private sector, or is there a public sector benefit to that too?
I mean, yeah, that's a really current question for us at Enfield. Obviously, part of our duty as a sort of local authority housing function is to create a housing market that works for everyone, so that anyone on any form of income can access the homes that they need. And our members are particularly concerned about the lack of ability of younger households to be able to move out of mum and dad's, or to be able to move out of very expensive, volatile private rented accommodation to own their own home. So in the new year, we will be launching a commission in partnership with Pocket Living to explore what we can do more and better in Enfield and potentially London and across the country on accessing routes to home ownership for first-time buyers. So it is a really important political priority, because not only do we need more social rent, we absolutely do, we need a functioning housing market at every level. I would say on the issue about private landlords, I was quite concerned to see the increased tax on them. We desperately need private landlords to house people on low incomes in the homelessness space. At the moment, our current homelessness portfolio runs at a deficit of 18 million. Other boroughs can run up to a deficit of 80 million per year. It's not good use of funds. If we were to trade out that portfolio at current market rates, that would be another 16 million. So if I just look at the impact of landlords and having to think about whether they're going to bear that tax increase or exit the market, and what that means for supply and therefore prices, it's really quite scary. And that is something that we see happens very quickly. It moves in the market very quickly, that sort of landlord sentiment. So it provides another challenge for local authorities. And a poor use of revenue resources, when actually we need to be putting money into bricks and permanent homes and assets, rather than revenue going out of the door at such large scales for such poor quality outcomes. So that is a concern to me, and we do need to see how that plays out in the market.
Thanks, Joanne. Dan, Lorraine, what's your sort of, how do you justify the request, the demand, the urgency with which you want support on demand side, in terms of, you know, the output that there's going to be in social and affordable homes, and council's ability to support delivery? Is this just for your own private sector profits requirements, or is there some wider benefit that comes from stimulating demand?
I think if you look at the budget yesterday, and I look at it, the cycle of build, if you like, we're generally, if you look at a big regen that Joanne is currently working on with Dan, and you take that as an example, and we start from the beginning.
I've lost you, Lorraine. Okay.
Do you
Dan,
want me to?
do you want to step in? Yeah, while Lorraine
I'll
rejoins
pick up
us.
till Lorraine gets back up. Yeah. So the question of wanting a healthy private sales market. So I think I agree with Joanne, exactly what Joanne said. Really, we need a functioning market that covers all tenures. So we're delivering 2,000 homes this year across London. As I mentioned, small proportion relative historically is open market sale, and the rest is mixture of tenures across affordable housing and build to rent. So our partnerships model, we are still building, and we'll keep delivering. But ultimately, for what London and society needs, we do need a well-functioning housing market. Private sales also have traditionally provided that cross-subsidy back into subsidising affordable tenures. So in the absence of a strong sales market and excess values being created through private homes, ultimately we're having to put more grant into schemes to fund the delivery of affordable housing. So yeah, so despite being, as I say, despite being a developer that delivers across all tenures, I think it is imperative we have a well-functioning housing market. And as Anna touched on earlier, at this point in the cycle, it does seem like demand stimulus would be very helpful.
Thanks, Dan. Danny, did you want to comment on that?
Yeah, I think it's incredibly important that we have a well-functioning private sales market, and we really haven't got that in London at the moment. Because we don't want to build monotenure estates, do we? I mean, one of the key things that we want to look at is mixed communities. It's a really, really important part of what we do. And we're working on lots and lots of regeneration schemes across London at the moment, and we want to get private sale back into those estates. So it's incredibly important that we have an exit strategy for that. And that is difficult at the moment. If you can't sell, doesn't matter about all the other stuff. You're going to end up with empty homes. So it's really, really important that people are going to invest there. And Dan made a good point there as well about the cross subsidy model. The funding of affordable housing within England has pushed towards a cross subsidy model. So the delivery of affordable housing has been through Section 106s and through RPs and local authorities taking cross subsidy out of private sale. And if we haven't got any cross subsidy, then that really, really restricts the amount of affordable we can deliver. And if we haven't got any private sale, then we're not going to have any Section 106s. And it's different outside of London, and we're still seeing that model working outside of London. But outside of London, the values aren't as high, so the amount of cross subsidy isn't as great. So we really do need to get a functioning private sale market back up and running. And that is part of what we were hoping we were going to get some kind of growth stimulus from the budget. So we're not have had anything specific for housing, but I was hoping that there'd be something that would create a positive outcome and some kind of positive feel about growth within the economy. And I don't think that budget's really done this. This is kind of, it seems to have tinkered around the edges and has not done anything particularly bold, which is going to kickstart a recovery. And all the forecasts are that we're going to have some growth this year, not great, and then probably not much in the next 2 years after that. And that's, that's not particularly inspiring, isn't it? What's the economy like? Meh is kind of the outcome, isn't it? And that's not going to get us all rushing. That's not going to get us all rushing to buy a house or to invest in a new flat. And I think that's the issue that we've got. And everybody's like, well, I'll just wait. And is inflation going to go up? And I'll just wait. And that's the problem we're in. We're in a holding pattern. And we're not seeing a government who's saying, right, I need to kickstart this. I need to do something to get everybody more positive. And I think that's what I really wanted to see in the budget.
Thanks, Danny. But it must be, mustn't it, terribly frustrating to be in government, seeing yourself pulling these levers. Over a whole year, they've been pulling levers, and these are levers we've been calling for them to pull for a decade, right? And they're finally happening. Yeah. And yet there's very little response. It's almost like a sort of climate change thing where, you make significant changes now, and we're all suffering through difficult adjustments. But the positive impact doesn't happen for another 10 years. So how do we measure that? And Anna?
Well, I was just going to say, Danny's touched on it briefly, but the big thing that will be needed to get people trying to access the housing market is housing market growth, and that's critically dependent on interest rates. So I don't think there's easy levers for government to pull. They want to pull interest rates down, but it's part of a big macroeconomic situation. Absolutely. It's not an easy, they can't just let's move interest rates down and that'll help the housing market. Yeah, that more than the talking up the economy, which they try to do, but there's an awful lot of voices out there that are talking it down. I don't think there's a simple solution that they could have easily done on that one.
I think they've just been dealt a very bad hand. I mean, it's one of those things, isn't it? It wasn't a great time to come into government. We'd had a very long period of austerity, which was particularly badly managed. We had a pandemic, which we're now seeing from the inquiries was incredibly badly managed. We had Brexit, which we're not allowed to mention. I hear people talking about all the different macroeconomic implications for this country, and then on the BBC and not mentioning Brexit reducing our GDP by 4%. That's a massive blow. Yeah. And on top of that, Ukraine and a few other things which is infecting inflation. So it's a really bad time to be in government and trying to get things to move forward. And I don't have the solution either, but I was just hoping that there would be something that would get us going and get those interest rates down and get inflation down. And it isn't easy, and it is incredibly difficult to manipulate macroeconomics when you've got all those factors against you.
Yeah, there's nothing there
Great
to
stuff,
attract
Danny. Thank you.
investors, is there? There's I couldn't see anything to attract investors, really incentivize. We need investors to come to the forefront, really, in major regeneration schemes, particularly to make them viable and make them work. I don't see anything that would incentivize them at this point in time, particularly build to rent providers.
Lorraine, that seems exactly right, because all of this boils down to the fact that we need more money in the system to make it work properly. But the questions are starting to come in, and the points starting to be made by the audience who are getting through their espressos as we chatter. There's a point Mike Diath's making from HTA Design, Lorraine, about greater collaboration between local authorities and the private sector to streamline process and standards and linking programs rather than treating things on a site-by-site basis. You and I have spoken about this and how estate regen, for example, could be unlocked if we could parcel those sites together to make it easier for developers to approach. Do you want to expand on that and pick up on Mike's point?
We're starting to see a lot of that, aren't we, with regards to partnerships that particularly London boroughs are putting through as a procurement option, and they do work as long as, like everything, they're approached in the right way from the beginning, with basic principles in mind. And how do we manage developments and move levers and have a template in place that allows us to do that collaboratively and collectively, because we now need to act if we do want to build at pace in a collaborative way. An example of that is new developments that are being put forward. We don't know at this point, by the time they've gone through planning, and we can talk about what's been put in place, which is positive, where they've put 48 million into 350 planners, but how quickly is that going to happen to get a project to site? We need to design, manage the viability in such a way that it is very adaptable to suit what the political climate dictates. And if we don't all collectively do that up front, it's not going to work, and we're not going to deliver because there's too much change. I don't know if anybody else has got any opinions on that. When we're looking to get a job to site, it's difficult in the cycle of build. Apologies, before I had a power cut. What's been implemented, what's been put forward or could be implemented to make that more efficient? There are a couple of things I think that I saw yesterday. If we're working in partnerships, it's about how we utilise the funding that's there, and the GLA, Homes England have put things in place that once we understand it better and we understand the detail about guarantees to support viability gaps, I really want to understand that more when we're talking about partnerships. How do we unlock these developments with what's being put in place? And we're going to move on to, no doubt, is how are we going to build them, and the skill shortage that we have. And I can see that there's some funding in place to help plug that gap, particularly with apprenticeships, particularly with SMEs. And I think that's really positive to get people back into the industry. But this is going to take time. I think for me, the disappointment is there's some very, very proactive areas to discuss that we are today that help us unlock and deliver at pace, and that's going to take time. There needs to be a reactive plan as well, and I can't see what that is at this point in time, particularly when we look at temporary accommodation and homelessness, how we get people out of that situation quickly. I can't see anything there at the minute that's going to help that.
No. Okay, Anna, over to you, and then Joanne, I'm going to take that up with you.
Yeah, just a response on Mike's question, really, that at the Housing Forum, we do a lot of work on partnerships. And one of the things that we do find is most successful is when there's an ongoing long-term partnership between a council and developers and RPs, because trying to do all the work of negotiating and setting up a partnership and building up a way of working and learning how you work together for one site and then trying to re-procure again for another site is very cumbersome. There's a lot of upfront work with the partnership, and where they're most successful is where they're already evolved. They need a site to kick off, to start together, but rolling that on and procuring in such a way that allows them to roll that on is definitely more successful, and is something the sector can do to try to deal with the issues. And it may also help with access to the National Housing Bank, that one of the partners will be able to leverage in some funding, so collectively you can go further.
Yeah, Joanne, how all of that depends on that building of trust. How do you create a long-term partnership with the private sector without appearing to be, in the pockets of the fat cats, as the denigrators would describe it?
Yeah. So I think We have a presumption against vehicles as a partnership delivery model because they can contain a connotation within a local authority, and when the market declines, the vehicle is sometimes criticised for the lack of output rather than understanding the market issues and in a political context. So I'm more in favour of long-term strategic relationships with key players. In Enfield, we have 3 preferred housing association partners that we've selected that will always be our preference to working when we need an RP, and we have our development delivery partners as well. So I think it's about making sure in that whatever economic cycle you're in, each partner can play their role to their strengths. At the moment, local authority, affordable housing is the way to keep supply going. Perhaps build to rent, as we've heard, build for sale is not a market that's working at the moment. So that places a really important role for councils to intervene or directly deliver. When the sales market does come back, that will change the dynamic and it will change the nature of how we need to work with our partners. So I do think, but we need to continue with those relationships through the economic cycles. So I think it's about long-term relationships, it absolutely is, but it's about fluidity of approaches and perhaps avoiding getting yourself tied in to models that might constrain both parties or more parties.
Well, that makes perfect sense, Joanne. So Dan, coming to you at Vistry, there's kind of 2 perspectives on those long-term partnerships, isn't there? The scenario that Joanne's painted is if you're on the inside, if you're one of those preferred partners, then fantastic, you're getting access to all sorts of delivery opportunities. But if you're on the outside and you're not one of those preferred partners, then is that a sort of closed borough to you and a no-go area? And are they potentially missing out on innovation and all those other good things that come with competition?
I mean, I think ultimately local authorities are going to have to follow procurement. Procurement advice. I think the partnerships we're talking about are not closed shops, are they? I think they are just establishing long-term working relationships, trust, openness. So we have a number of sites in Enfield, for example, but they've all been secured competitively. They're large and they're large scale in nature, and that's absolutely fine. So we really value long-term relationships because I think actually in the current climate, at least, but not least at all, is when you have that long-term relationship, you can find solutions to problems and find, certainly with Joanne talking about build to rent, we've had discussions. We're finding ways to keep delivering, and it's much easier to do that when you have that strength of relationship. But yeah, there is a fine balance, and I think that balance is right, that ultimately new large-scale opportunities should be publicly procured and tendered in the appropriate way. And I guess it's on us to demonstrate we're the best partner in a competitive context.
Thanks, Dan. Okay, now in the context of the announcements yesterday, but also in the wider kind of reform and efforts of the government to stimulate housing delivery, we got some questions that have come in from the audience. Does anyone want to pick up on Lionel Igadora's point on rent to buy model as an alternative housing option? Would anyone like to comment more on the Treasury decision not to allow councils to access the housing bank? And there's another question about BTR and that sort of more mid-range of affordability and the viability question. Anna.
Well, just on the first point about the rent to buy option, I think that is a challenge, particularly in London, because most of the build to rent suppliers want to own the building permanently. They want to have it, they design it with a rented tenant group in mind. They design it to be easy to manage. It may have collective things, communal gyms and stuff like that. So it's very much built as a rented product, and it doesn't lend itself to having individual houses sold off. You'd end up with the same problem as councils have had to deal with the right to buy, where even more so because it tends to do more communal facilities. So that works better for a house model if you're making houses to sell. Although I understand there's still some financial challenges with that. It's not really what the build to rent companies want to do, to be disposing of the assets that they've built in order to bring a return from. So I think it's challenging from that sense, but particularly in London, where you tend to have mainly flats.
Great, thanks, Anna. All of those, Danny, to you. But also the question, I guess, we need to start addressing, which is around the affordable housing programme and bids that are going to be going in, or will they, in the near future?
But I think the first one on build to rent, I think it's great that local authorities are getting into that market, because I think it's not quite as rosy as it has been, as Dan was saying about the difference in kind of cost in terms of yields and interest rates, and people aren't getting out of it what they want. And so I think that's a market that local authorities can step into. And I think one of the things they can step into it is because the market will change. So if they're delivering an asset that they can then use, help stimulate the market now, help things go, there's always an option of selling that later on. Once that's stabilized, future down the line, we're not always going to be in this position, and there will be an ability to trade some of those assets later on, realize that money and do other things with it. And I think that's the role of the local authority, isn't it? Is to intervene when the market isn't able to deliver, and then get out of that market when it is able to deliver and do other things with it. So and you can trade those assets. So I think that's something to really be encouraged. I think not accessing the bank and cheaper loans is a massive own goal. I think that would really help stimulate it. It would get kind of build to rent programs going. We would get more affordable going, particularly in London. The local authorities are really gearing up to delivery. They're in a much better position than they have been for a very long time, and we're not seeing the G15 and RPs gearing up. I think they've got another 2 or 3 years before they'll come back into the market in any sizable way, because they're dealing with legacy issues on existing projects. And have we got 2 or 3 years to wait before we can really kind of build at scale and at pace? I don't think we have. I think we need to be doing it now. So maybe that's something that can be reviewed by government and have a second look at, because I think it would make a really big difference, as we talked about the kind of headroom and how that would help. And those were the two things I was thinking about. And you asked me a third question there at the end.
It was about the affordable homes programme. So the bidding rounds that are coming up for the next round of that. What are your expectations there?
I think it's a real mixed bag, isn't it? Because I think lots of organisations are not in great places at the moment. So I don't think it's going to be huge. I'd be surprised if it all taken up. And also, continuous market engagement means that you can wait and see, can't you? And hopefully the position changes and you get into a better position later on, and the winds of change help you. And if you're asking to fix prices now for that whole period and grant levels, well, that's not great, is it? I mean, there's certainty, but inflation is going to push costs up, and we've seen an increase in the amount of grant going into projects because it needs it. The viability is not there, and I don't think that's going to go the other way over the next few years. So I think it's going to be very interesting. People are going to bid, and I've been talking to people and they're saying that they are going to bid, but I don't think it's going to be they're not going to be quite as vigorous as they have been in previous years, would be my guess.
So that becomes quite disheartening, doesn't it? Joanne, isn't there a worry that the government will start looking at this, saying, look, we're running out of path on housing. We keep trying and nothing happens. We're going to have to focus on something else.
Yeah, I mean, thinking about our bidding strategy in Enfield, I obviously recognise the points that Danny makes about the need to ensure you can afford to deliver on what you actually bid for. And the 10-year programme and making commitments over a 10-year period is a big ask. But I am conscious that the government hasn't unlocked all the funding for London. It's predicated on take-up, demand and delivery. And if we don't put in our strongest bids, then we're not going to unlock that amount for London. And I do think that's really important. And I think all of us have a duty to kind of try and stake a claim early on into that money. I think grant rates, we keep saying 250 is not going to work. It might work on some schemes for 1 or 2 years, but it's not an enduring level of grant. Some of us are really taken with the Granger report on what makes social housing homes viable. We kind of really well articulated, and it's pushing 300k grant per unit is the demonstrable viable level, and I'm sure that's going to increase over time. So I think for our bid, we're going to make it an ambitious bid, but it will be evidence based in what it takes to deliver it. And obviously we wait until January when we know about these additional measures to see what flexibility we've got around that bid, and so we might be putting scenario bids in as well. But I think, you know, it's a moment in time, isn't it, to really stake a long-term role for councils in delivering homes, and that's the most important thing here.
Absolutely, Joanne. We're big supporters of Michael Cavini's report on just a bit of realism around the fact that if we want to build social and affordable homes, then it requires subsidy, and you know that's money. It's got to come from somewhere, and it doesn't grow on trees. Anna, I'm going to hand on that point. Hand over to you, but also to respond to David Hutt's question, which is sort of looking more broadly about the impact of devolution and whether that will override any kind of positives coming out of the budget and previous decisions, and actually just slow everything down outside London.
There is a risk. I mean, it's two sides to devolution. Certainly, there's the kind of, you know, mayors know their local area kind of argument, and I get that, and it matters, it's real. But there is also, do you end up reinventing the wheel and creating a system that's very complex, especially if you're a big developer or an RP that operates across many areas, you make things more complex. My understanding of the way that the Affordable Homes Programme funding is going out is that it's not as devolved as the spin on the press release kind of led you to believe, and the mayors have been involved upstream at the design of the programme, but that they won't be given a big slug of money to design their own programmes with anything like the GLA system. It's much less devolved than that. So I think the government is mindful of the two sides to that issue and is trying to balance things in a way that hopefully will mean that there's an understanding of local issues, but that we're not dealing with lots of equivalents of a London plan across the whole country.
And we've got Lorraine back. Lorraine, hello. Before the power cuts out again, what's your sort of take on that issue of devolution? Because you must be coming across it outside of London. Are things sticking and slowing down because of the reorganisation of local government, because of planners deciding that they want to go somewhere else and so on?
I think we're definitely starting to see that it doesn't help, does it? It's just going to slow everything down. Particularly when people don't have job security in that environment, people aren't making decisions, and that's a very real moment in time for us, at a time we don't need it. Yeah.
And Dan, are you seeing that in the sort of southeast area?
Yeah, I probably echo Lorraine's comments there, Toby.
Yeah. Great, thanks. We're struggling with the gremlins today because I can't, for some reason, comment on anyone's comments going into the chat. So I am reading them. They are great. Thank you very much, audience. Keep them coming, and I'll pick up on them as we go. But we got Lorraine back, so that's the main gremlin overcome. Anna, you wanted to come in, and then
just on the point you asked about devolution, but then you also talked about London local government reorganisation. Those are two totally different things that are going on, and they are often conflated as the one thing. You know, we've got more devolution down to mayor level, but at the bottom level we've got the opposite of devolution. We've got district councils being merged together, and Lorraine's absolutely right that the transition is really negative. It has very big risks attached to it, that people won't know what they're doing and they won't function as effectively because they're busy with the merger. I do think there are positives at the end of it. Having unitary authorities that are responsible for everything should be really helpful for housing delivery, but the getting to A to B, I agree completely, is a challenge.
And there was an announcement of some extra money for devolved authorities for mayors, and some of that is allocated to London, right?
I don't know so much about this extra National Housing Delivery Fund. I don't know if any of the others do. The AHP obviously has always been totally devolved in London, but that's the bit I was talking about that isn't being as devolved as they kind of implied in the press release.
But there is more new money. It seems, reading between the lines in the statements yesterday, that's going to be available to mayors, and the London mayor will be able to bid for some of that. But we don't know on what grounds. You know what the conditions
we'll need
are
to
going
see
to be.
the details really on that, won't we?
Yeah, exactly. Danny, your hand was up.
Everybody made that same point that I was going to make. It's short-term pain for long-term gain. I think with the restructuring out in in the home counties and across the country. And we are seeing some local authorities not have the bandwidth to do more, but we are seeing some pushing through and saying no, we're going to carry on delivering. So it's a mixed bag, and I think it depends. I think it depends on the individual local authorities. It depends on or district councils and borough councils, and it depends on their appetite as well. And it depends whether they think they're going to get the big job or not. So the ones who feel like they're going to get the big job are being much more positive about delivering still, so that they can build their case and their portfolio for the next job. And the ones who are thinking, well, I'll take the payoff, or it's not going to be me, are less inclined to be doing more. And that's what we're seeing. And it's kind of human nature and quite practical on that, isn't it? So, which is unfortunate if you're working in one of those boroughs where the leader is unlikely to get the big job.
Well, and our conversation is wandering far and wide, and I think it's probably, Dan, is probably an indication of the sort of the lack of oomph in the budget for the housing sector, that we've sort of moved on from it. But that, what Danny just said, and that issue of local government reform brings us on to Danny Kay's point in the audience, which is that there are elections coming up in May. Dan, as a developer, does that kind of give you cause for concern, given the sort of state of local politics?
I wouldn't say it doesn't give us concern, but we do plan for it. So I guess three main things. One, where we're in joint venture with local authorities, which we do have one or two, not expecting change. And that has been surprisingly smooth where that has happened in the past, but clearly a risk where there may be but the strength of business plans, strength of aims and objectives kind of can help see through that. The more immediate or moving things are planning applications. So obviously for a few months now we've had in mind PERDA, but also maybe slow activity immediately after any election is a risk as well. So with delivery in mind, we try to time those applications around that risk. And then also procurement for new projects that we are actively bidding on, acknowledge the risk that if those decisions are not made within a certain time frame, the chances are they go back by 3 to 6 months. So something we actively manage, not necessarily concerned there.
And is there any sign, Dan, of are you negotiating? Are you engaged with Reform, because they're a force? They're going to be a force in the elections to some extent, at least in London and obviously wider. Is there any sign of housing policies from them? Is my direct question.
Yeah, I mean, as a wider group, a wider business, we consult with all of the political parties. We'll attend briefings, etc. Most of the focus at the moment has been engagement with the current government, obviously on MHCLG, on all the measures that we outlined earlier on. So I've been involved in a number of roundtables and developer forums, kind of looking at these impacts of the measures. So certainly something we'll keep an eye on moving forward.
Thanks, Dan. And I'm just picking up on Mike Diaz's question. So the same to you, Lorraine, and I guess the Green Party as well. There are new forces at work in local politics in London. Are you engaging with them, and what sight of policy have you got?
I haven't actually seen any movement or sight of policy apart from, as Dan said there, the work that we've been doing to try and manage the current political mindset that we're battling our way through. I haven't actually seen anything. I don't know if anybody else has, to be fair.
Thanks, Lorraine. Anna, what's your take? Housing Forum's always very well informed.
Yeah, I mean, I think Reform are a challenge. There isn't really much housing policy apart from a pro-private landlord, anti-tenant, so opposition to the Rentals Rights Bill. But that's about it. They're a blank slate. And they also, being very new, they don't have the kind of infrastructure that we would normally engage with. There aren't any think tanks. There aren't any MPs, or very few. There isn't local party structures. There isn't people organising roundtables and stuff. So it's quite hard to get an in there. I think there's an interest in perhaps trying at their party conference this coming year to find out how to get in with them. So I think that is a real challenge, and it's one we definitely need to be thinking about. And to some extent, with a blank slate, we can help them come up with some sensible housing policies, hopefully. The Green party have some very anti-housing policies. They have some fanciful numbers on council housing. It would need massive funding. I mean, if they put the massive funding in, obviously that'd be great. But if they come to power in local authorities, they won't be in a position to put housing in. They're not very comfortable with private housing whatsoever. So the kind of cross tenure vision that Joanne was articulating with homes of different types and tenures, that's not something they're behind. They're very much behind only social housing counts and very, very suspicious, I would say hostile towards private developers. So if we had green councils in London, I think we would struggle and find that's quite difficult, albeit they would have to work within a national framework.
Thanks, Anna. Okay, Joanne, I'm not going to ask you to comment on anything political unless you choose to, but I would like you to look forward as we sort of start to draw this discussion to a close. At the things that weren't in the budget that you would like to have seen, and what you most want to see happening over the coming months in order to make sure that those schemes that Cruise Hill, Meridian Water and elsewhere get delivered.
So I think, echo the points about the demand side support and stimulus. That is something that we need to progress, and that's why we're going to establish our commission to find some solutions on that we can implement locally insofar as we can. I think the thing that we haven't raised and that perhaps needs consideration is the overall regulatory landscape that the system all of us are working in, and the extent, there's some very good reasons why some of the regulations have been put into place, and many of them are well managed, but as a cumulative, are we going too far into an over-regulated environment, given the challenge that we've got to embrace in terms of scale and pace of new homes delivery? And I do think it would be beneficial for somebody to step back and have a look at that and just double check that things aren't going off on their own trajectories, that overall it's just going to be further blockers. So I think looking at the regulatory environment as a whole, at the whole system across London, would be helpful.
Okay, and that's coming from an award-winning planning authority. But
it's not just planning that's part of the regulatory environment, is it? There's a whole raft of regulatory measures that we're all subject to. But planning, we need to continue to transform planning services too.
Thanks, Joanne. Lorraine, so what part of the regulatory system would have the most impact if it was if there was that stepping back and looking at the system as a whole with a desire to reform? That was for Lorraine, and if you are talking, you're on mute.
Oh, it's a big question to answer that one.
Sorry.
What would I be looking for as a whole?
What would in the regulatory system, what reform would have the most impact on your business, on your ability to deliver new homes?
At this point in time, I always start from basic principles. It's the planning, really. It's planning reform. It's unblocking. I'm blocking that at the minute to get things moving at my current position. Yeah. Thanks,
Lorraine. Dan?
Building safety. Building safety regulations obviously been a huge one. Probably going back a month ago, it would have been one of my number one risks for delivery in the year ahead. About to run out of time, aren't we? So I'm going to cut it short.
We got to 59 minutes before anyone mentioned building safety. That's got to be a record for this year.
Well, the reason for that is there's been a lot more positive news coming out recently. So obviously it's gone into MHCLG, employing a lot more people. We now have a key account manager, for instance. So the communication has improved significantly, and there are assurances that we're going to be getting back to that 12-week statutory period next year. So we'll wait and see when it happens, but that's gone from being probably maybe up there with top 1 or 2 risks for delivery next year to feeling a little bit more confident at least.
And it's not that it is fixed, it's that you're seeing signs that it's going to be fixed, kind of thing.
All the noises are exactly what we want to hear. I appreciate there's a capacity challenge and there's actually challenging delivering, but we're still budgeting 6 months as a cautious position, but hopefully we'll see improvement on that as we go into next year.
Yeah, and that's a long way from the 18 months that we were seeing on some schemes. So good news. Anna.
Yeah, just on the regulatory environment, still waiting for the detail of these proposed temporary measures to alleviate the regulatory burden. So things like removing the bicycle storage, lower sill rates and stuff. We were promised that out in November, so watching out for that very soon. But also the next London plan is still being reviewed at the moment. So I'm very much hoping that the next one doesn't just add a load of extra regulations in for London, but takes a more kind of pragmatic and overview approach throughout, recognizing the downsides of things that sound like nice ideas and taking the right balance on that.
Yeah, really difficult as political organisations looking at things like regulations and not adding to them, because if you're not doing that, then what are you doing?
Yes.
So it's a tricky issue. Danny, what reform would you most like to see to regulation?
It wasn't a reform to regulation. The point I wanted to make before we kind of close up was about how we can kind of get first-time buyers back into the market, and that's one of the things I think we really need to stimulate. And we tried kind of that Help to Buy, and I think that did stimulate it. But I think it meant that new build homes are slightly overpriced compared to existing stock, and I think it pushed profits through rather than really stimulating in the way that was sustainable. And one of the things I've never really understood is people's antagonism towards shared ownership, which is, a really good product for first-time buyers. Now, maybe towards some of the tweaks on maintenance and that percentage split, but that's a minor tweak that you could make. And I think if we were to increase funding towards shared ownership and also plug it, I mean, it works in London more than it does outside of London, so this is a London solution. But if we were to push shared ownership, and there are lots of pushes towards that, about promoting it more and increasing funding towards that, I think that would be a real positive to get people, first-time buyers, back into the market.
Thanks.
And that's what we need. We need to release that first-time buyers so that it will cascade through, and that would be one of the things I would really, really promote.
Thanks, Danny. Okay, Joanne, last word to you on shared ownership. Is that part of the solution?
I think it is and can be. I think that it suffers from the reputation around service charge levels, perhaps, and difficulties that we've seen residents experience. So I think we need to be clear about the affordability of the product, and it sort of takes us back to our role in managing homes and housing, isn't it? And the increased costs that we have to manage housing, that has to be paid for, and that's a part of the consequence of the regulatory environment, I would say, but also of price inflation and needing to be an effective manager of homes. So I think we shouldn't rule shared ownership out, but there's more work to be done to make it a product that is affordable for people.
Okay, and more work to be done on the regulatory environment as a whole, and we will leave that to future discussions to pick up on what that. I'm sure you'll be active in your role as at London councils as well as Enfield, Joanne, in pushing that forward. But we ought to draw this to a close now because we're 4 minutes over. I'm very sorry. Sorry to speakers and sorry to viewers for overrunning your first meeting of the day. But warmest thanks for joining us, viewers. Thanks so much for all your questions. Thank you. I'm going to end this on Adam Tucker's note in praise of all the wisdom in the room today. So thank you very much. Join me, audience, in thanking our speakers with a round of virtual applause. Thank you to Anna Clarke from the Housing Forum, and thank you, Joanne Drew from the London Borough of Enfield, and thank you to Dan King from Vistry Group, and thank you to Lorraine Casey from Lovell Partnerships and Danny Sutcliffe from Loft, both for your contributions to the conversation, but also for your sponsorship, which makes the webinar and the whole Enfield season possible, and to Lorraine in particular for your persistence in rejoining us and contributing to the conversation. Thank you very much, and thanks audience for sticking with us during your breakfast hour. Now, I understand your attention might all start to wander as we head into December and the Christmas season, so we're so chuffed with the material that we've created from our next borough that we're featuring, that we're saving it until the new year to make sure we've got your undivided attention. So we're going to be back in January to learn from the first post-war Newtown, Stevenage, on its contribution to 1.5 million new homes. We look forward to seeing you all then, but until then, watch out for our end of year specials and have a fabulous festive season. In the meantime, Thanks again to everyone at Enfield Council and Red Loft and Lovell Partnerships, and to you, our audience, for your contribution to 1.5 million new homes. Thank you very much.
Thank you.